It is time to get a look at your money this morning, but first let's get a look at the weekly stock market recap. When markets closed on Friday, the S&P 500 gained almost 4.5%. The NASDAQ rose by 4.7%, and the Dow Jones Industrial Average was up 3%. It's good to see these finally moving in the right direction. And on Thursday, the U.S. Department of Commerce released its latest gross domestic product report, which reported that economic growth from April to June contracted at an annualized rate of nearly 1%. This coming after the first quarter's negative growth rate of almost 2%. So joining us, of course, is our financial expert, Mark Ravichesky, from the Quad Cities Investment Group. So thank you so much for joining us this morning.
Good to see you again. You're right. Really nice to see that little rise in the stock market last week, except, that economic data that did come out on Thursday, though.
Absolutely. So when you were looking at that data, what was going through your mind?
Well, the first 6 months of this year has really caught much of Wall Street by surprise. Mm-hmm. In the first quarter here, Wall Street was expecting the economy to grow at an annualized rate of 1.1%. Instead, the economy actually contracted. It shrunk by 1.6%. In the second quarter, Wall Street was expecting the economy to grow by 0.5%. Again, the economy contracts by 0.9%. Since the beginning of the year, there has been this growing concern that, at some point, the economy would dip back into a recession. But the general consensus, though, David, was that, if we did go into a recession, most likely towards the end of this year, maybe perhaps the first half of next year in 2023. Instead, we do get this technical recession in the very first 2 quarters of this year.
And what do you think is causing this sudden drop? I mean, we see some positive growth, and then we see kind of a sudden drop. What do you think is causing that?
There's a couple of key factors in play here, David. Oops, if we could go back one more.
Should be able to in just a second, maybe.
Maybe.
There we go.
There we go. Thanks, control booth. Well, after this initial economic fallout from the pandemic, David, we did see this surge in the economy and labor market as businesses reopened, people returned to the workforce. We saw this pent-up consumer demand. People were now free to go to the movie theaters and ball games and take vacations. But as we get towards the end of 2021 here, David, many of those, we can call them economic tailwinds start to subside. Going forward, any economic gains now become much more difficult to come by. In other words, the free ride basically comes to an end. And second of all, obviously, we have this very high inflation. Now we're seeing surging interest rates, and that places a tremendous strain on, consumers, businesses, and ultimately the U.S. economy.
Right. And usually when you see 2 quarters of negative growth, that a lot of people will call that a recession, but you have some people saying that we're not in one. You have other people saying that we are. So what is your opinion on that?
That's a great question. You're right. We have seen, a couple of different definitions being thrown around the last couple of days. Now, control booth, if we could go to that next graph we have up, perfect. The long-standing benchmark definition is 2 consecutive quarters of negative economic growth, which we did get on Thursday, and that's the basic definition that's been used for decades. Right. For over 14 years, David, I was a professional trader, and that's how other traders, the financial media, and much of Wall Street defined it. In fact, I reached out to some former trading colleagues on Wall Street on Friday, asked them. They go, yep, 2 consecutive quarters, negative economic growth, it's a recession. Now, for it to officially go into the history books of the U.S. economy, that's determined, David, by the NBER, the National Bureau of Economic Research. And they consider other factors such as industrial production, the labor market, consumer spending, which has remained fairly strong. Okay. And in my opinion, I think they're going to see how this economy and these other factors play out over the upcoming months before making any decision. However, any decision on whether the economy is deemed to be in a recession or not comes down to a judgment call by the NBER. It's not as if they input this massive economic data into a computer, push a button, out pops a piece of paper that says, yes, we're in a recession, or no, we're not in a recession. It comes down to a judgment call.
Got it. Okay. Well, that makes it very confusing for us, normal folk.
One of those times when a little clarity adds a little confusion.
Yes, absolutely. Well, thank you, Mark, so much.
Great to see you again. Enjoy the rest of your day.
Yeah, you too.